All right. Good morning, everybody, and welcome to the pre-market prep session. This being our deluxe session here for August 14th, 2023. I'm going to go ahead and get our show lights going as well. I hope everybody had an amazing weekend. And of course, you're here to kick off this week. The pre-market prep session is our daily session where we go over any and all information necessary to keeping you consistently profitable here. We had a great week last week. Apple puts, NVIDIA puts, SPY puts, QQQ puts, a number of different plays that came to fruition beautifully for us. There we go. We got the light, we got the cameras, and we are ready for action. And that's what we're here for each and every week, to get ready for action each and every day, really. 8:40 to 8:45 a.m. Eastern Standard Time. We're here putting in the work. So putting in that constant investment, trying to get 1% better. So make sure you throw your ones in the chat, signifying your intention to get 1% better by the end of this session, right? Setting your intention is so important. That's what we do here, right? When we gather together. But you also need to do that before each and every market day. What are you intending to do? How are you intending to execute? What trades are you intending to make? All of that is very important to act with intention, right? If you don't want to win by accident, because that's not replicable. You can only win by accident so many times. You want to win on purpose, get better on purpose, invest with purpose, and trade with a purpose. So setting your intention, right, is the beginning of acting in that purpose. And I'm excited to get into it this week. So we'll kick off with the week ahead, and then we'll dive into our dive into our Monday specific news. And I hope everybody had a great weekend again. I had a great weekend myself, filled with family, celebrating the life of my 80-year-old great uncle, which was awesome. Getting to hang out, with my mom and show her love after surgery and in the midst of recovery last week, and just getting a chance to relax and be myself. You can't ask for much more out of a weekend. Now, in terms of the week ahead here, let's dive in. The NASDAQ and the S&P 500 both posted a second straight weekly decline as hotter than expected U.S. producer prices data pushed Treasury yields higher and sank rate-sensitive mega-cap growth stocks. So I had some technical issues, couldn't go live on Friday, but one of the things we were watching to end the week was, of course, CPI data on Thursday, which is Consumer Price Index, a measure of inflation for consumers, you, me, our families, and then producers, right? The people that produce goods. How has inflation affected them and their ability to produce goods? Well, it looks like, PPI data was more than expected, right? Worse than expected. And, that's part of what they say, hey, that pushed Treasury yields higher and it, kind of sank stocks. So PPI, right? Inflation for producers goes up and the stock market goes down is essentially what they're saying here. The much anticipated consumer inflation report on Thursday showed that the headline and core consumer price index was unchanged from June, bolstering bets among market participants that the Federal Reserve would hold off on further rate hikes. However, hotter than anticipated producer inflation data on Friday played spoil sport for risk on appetite, with both the headline and core producer price index for July rising from the previous month. Still, the overall picture points to a slowdown in inflation and has even led to hopes of disinflation. There is a rising consensus among traders that the Federal Reserve will be able to deliver a so-called soft landing. For the week, the Dow Jones average scored a 0.6% gain, while the S&P edged 0.3% lower, and the NASDAQ composite lost 1.9% for its biggest back-to-back weekly loss since December. Now, the energy sector had the strongest return of the week on the back of higher oil prices, while the technology sector saw the biggest drop. So tech, right, QQQ, all those guys dropping. That's why we've been repeatedly for the past 2 weeks playing what? Apple puts, NVIDIA puts, right? QQQ puts. That's what's been on the docket over the course of the past few weeks. We've had at least 5 NVIDIA trades called out, right? Multiple different Apple trades called out with its repeated hourly bear flags and it losing that rising wedge that we talked about a few weeks ago. Multiple QQQ trades called out, SPY trades to the downside. So tech right now is losing it. It's been on it for a while, right? This doesn't mean that the market is doomed. This does not mean that we suddenly turn into a bear market. Part of a bull market is higher highs and higher lows. It's not just higher highs, right? So far, all we've seen is higher high, higher high, higher high, higher high on the weekly, right? It's just continuous higher highs. Higher lows have to get mixed in. That's part of it being a healthy market. So, don't have concern. Don't run around scared or intimidated. Make your money off the downside, then make it back to the upside. In terms of global news here, and this is something that I wanted to speak on here that's very important going into today specifically, trouble in China. 2023 was the year that China's economy was supposed to come roaring back following the end of its zero COVID policy, but all indicators are pointing in the opposite direction. Data has shown slowing growth and soaring youth unemployment, while the economy slipped into deflation and trade surplus plunged in July. Quote, here's what we do know. Investment in China has fallen sharply. There is a huge debt load, and China's population is now falling, Seeking Alpha analyst Logan Kane noted. Adding to China's woes, the White House on Wednesday restricted U.S. investments in the country, which also raised concerns of aggressive retaliation a day after President Biden called China, quote, a ticking time bomb that puts the rest of the world at risk. Now, in terms of consumer news here, Coach to First Class, Tapestry, ticker TPR. Tapestry's purchase of Capri Holdings, ticker CPRI, which came close on the heels of Amazon's move to cut private label brands, drew largely positive reviews. The combination of Coach, Kate Spade, and Stuart Weitzman, together with Versace, Jimmy Choo, and Michael Kors, is said to create a powerful new global luxury house that is anticipated to deliver immediate value. Wells Fargo said the $8.5 billion deal positions Tapestry to own the affordable luxe handbag market in the U.S., but the threat to high-end behemoth LVMH seems limited for now, given the latter's sheer size and diversification. Knee-jerk trading on Thursday saw TPR shares down 16%, while CPRI finished the session 56% higher. For those that might be confused about that, if you acquire a company, typically you have to overpay. So you want to think about that as you bidding at an auction. In order to acquire something at an auction, typically you have to pay more than what it's worth to acquire it. It's the same thing when you go about acquiring a company. So the company that does the buying of the other company, their stock typically goes down, and then the company that gets acquired, their stock goes up. Very important kind of phenomenon to be aware of. In terms of media news here, costs in focus. Disney, ticker Diz, initially dipped 2% after hours on Wednesday after posting third straight quarterly drop in Disney Plus subscribers. While cost cuts helped push profit past estimates, subscriber growth continued to stagnate across streaming platforms. Later on, the stock reversed course to rise. CEO Bob Iger also said additional terms on password policies will be rolled out this year, following in Netflix's footsteps. Third Bridge analyst Jamie Lumley said the streaming business faces a long road to profitability, warning that 2025 may be a more realistic timeframe for that goal than 2024. Meanwhile, Disney's ESPN moved firmly into sports betting, teaming up with Penn Entertainment, ticker PENN, for an ESPN-branded sportsbook. Investors cheered the deal, with Penn rising 30% after hours on Tuesday, but the street had mixed reviews. Disney, another one that Disney. It was funny. I checked back in the end, 700% profit because Disney just kept on rocking. Right, I assume after. So we executed our post earnings strategy perfectly. Right, made a bag on Disney. I was fine. I tend not to go and check back on stocks that I make my money on. But just was looking through at the end of the day. I was like, wow, Disney even kept on rocketing. So they announced that news after they had started to turn around. They're like, hey guys, this is our chance to stoke it. And it looks like that's something that kind of helped them catch wildfire. So congrats to Disney, right? Not mad at it. It's important to make sure you maintain gratitude throughout each and everything you do in markets, right? You don't just casually turn $40, into, over 100 something bucks, right? Or 200 something bucks or 300 something bucks. And then you're sitting there like, oh man, I could have got more, right? You're grateful for what you get, and it's more than zero, which is a huge plus. And then you go about looking to execute again, right? But gratitude is so important in life. I feel like it's easy to get down on ourselves. The enemy always wants to remind you about what you don't have instead of what you do have. So If you have issues going on, remember that you at least have things to have issues happening, right? If I have computer issues, right, technical issues, at least I've got a computer, right, to have issues with. I've got Wi-Fi, I've got power in order to have those issues. So you want to make sure that you're not taking anything for granted, because again, in this stock market, if you enter a trade and it goes for 500% profit, you expected that to happen, right? It's just how humans are. Something goes right, we expect it to happen. If something goes wrong, it's the worst thing in the world. So you have to actively remind yourself to be grateful for each and every win, each and every gain, each and every positive form of execution, because there's always technically something wrong. Jeff Bezos, I'm sure, wakes up with 1,000 worries in the world, and he's still one of the most wealthy people in the world, right? No one is exempt from worrying. It's just important to recognize where you are and be grateful for it, right? So there's a nice little mindset thing sprinkled in, because even winning traders can have freaking horrible lives. You can make tons of money in the market and still have a horrible life. Making money does not equate to a good life, right? But it does kind of really, really help you to make money when you do have a positive mindset. So, just make sure that you keep that and you move forward, and you have a great life, right? That's what allows you to have a great life, by showing gratitude for each and everything. Now, in terms of economic news here, CPI recap. The odds of the Federal Reserve leaving its current policy rate unchanged rose after the latest inflation data showed prices continuing to moderate. The consumer price index held steady in July, rising 0.2% as expected, though services inflation remained sticky, driven by elevated rental costs. So, following the prince, Victor Dergunov said in a Wall Street Lunch podcast that similar readings could lead to a Fed pivot early next year, adding that, quote, "We pretty much hit the Goldilocks zone." Traders also initially cheered the CPI report, but Fed Speaker Mary Daly's hawkish-leaning comments led the markets to lose some steam. Now, in terms of tech news, summer of automation. If you're going to San Francisco, be aware of a supercharged initiative for driverless vehicles that will likely transform the automotive industry in the ways people operate across the nation. In a contentious vote, California regulators gave the green light to Alphabet, who owns Google, Alphabet's Waymo, and General Motors Cruise to expand the breadth and location of their operations. California Public Utilities Commissioner John Reynolds said self-driving technology will increase road safety, and technologists agree, given the elimination of human error. On the other side of the debate were residents, as well as police and fire departments, frustrated at the potential for traffic interference as job threats to human drivers of Uber and Lyft, which are also based in San Francisco. So, I mean, that is tough. That's ballsy, right? Going and saying, hey, we understand that these two, rideshare companies are based in this city, and we want to debut driverless, right? But at the end of the day, it's tough, because those companies ultimately want to do that. Uber does not want drivers. Lyft does not want drivers, right? Drivers are the ultimate expense for these companies, and ultimately their profitability and their scaling is contingent, not just like, it helps their bottom line. It is contingent to drivers being phased out, right? That is the whole point. Uber and Lyft are not attractive at all otherwise. Uber just turned its first quarterly profit literally this year, this past month, a few days ago. And Uber has been around for how long? They just turned their first profit. So drivers are the least profitable part of these ride-sharing companies. They're looking to eliminate them as soon as possible. So while there is some pushback, it's kind of like, I don't know what to equate it to, like when an event that you and your significant other have to go to and it might get canceled and you kind of don't want to go to begin with. You're like, oh no, like, don't get canceled. Let me text and make sure that they're still on. But in the back of your mind, you're like, oh, please cancel, right? I don't want to do this. That's what Uber is doing, right? Lyft, they're like, oh no, please don't develop a technology that's going to save us millions over the course of, of the next year, billions over the course of the company's lifetime. In terms of weekly movement, oh, that's cool. So now they're showing the weekly movement for the indices. So last week, the Dow finished up 0.6, S&P down 0.3, NASDAQ down 1.9, right? Very important to recognize, kind of how each of these move. The Dow can have a green week, the S&P have a slight red week, and the NASDAQ have a big red week. In terms of the S&P sectors, consumer staples were up 0.3%. Utilities up 0.8%, financials were flat, telecom up 0.3%, healthcare up 2.5%, industrials up 0.5%, information technology down 2.9%, materials down 1%, energy up 3.5%, consumer discretionary down 1%, real estate up 1%. That is important because paying attention to what sectors of the S&P are doing can help you find, for my people that are very invested in like long swings, it can help you find long swings. Look and see, okay, what sector was up this week or what sector was down this week? Let me go check out these sectors, right? So, healthcare was up 2.5%. You take that and you go, okay, let me check out some healthcare moves, right? Let me see how the overall healthcare sector was looking. You can go to Thinkorswim, type in XLH, right, which is a healthcare ETF, I believe. Or just search Google for healthcare ETFs, S&P healthcare ETFs. Look it up. That ETF will show you what the basket of stocks, right? A basket of stocks that represents the healthcare sector is doing. If that is firing a weekly bull flag, that's a great opportunity for you to get into, right? To the upside, get into calls, a few months out and you're golden, right? Or you can go deeper and start looking into, okay, what are the individual stocks within that ETF, right? For healthcare, it might be Johnson and Johnson, it might be Eli Lilly, might be this, might be that. Then look at the individuals within that sector and say, oh, okay, these are the individuals. These also have really good looks, weekly cup and handle, daily bull flag, daily inverse head and shoulders, right? So for my people who are long swing people and you're like, hey, how do I find nice long swing trades? Pay attention to the sectors as a whole, the S&P sectors. And again, we live in a world where everything is at our fingertips, right? Your only limitation to how productive you are is how much energy and effort you put in. Because what I described about looking up the sectors and then going through, sector by sector, that takes legitimately probably 20 minutes maximum to do that for every sector of the S&P, right? You can look and just see one and say, oh, that sector looks interesting. Let me check that out. It takes 5 minutes. Altogether, it takes 5 minutes to get that done, right? 2 Google searches, some clicking on Thinkorswim, and you're done in 5 minutes, right? And you have the opportunity to go through, chart a bunch of different stocks. And now every day when you wake up, right, as time goes on and you continue to do that, what do? You wake up to trade ideas almost every day. I wake up to notifications on my phone and I'm like, oh, I don't even remember setting that notification. I don't even remember doing analysis on that stock because it happened months ago. But taking the time to do that is super important. That's why I tell people, if you're lazy, the market will reward you with laziness. But if you go out and you put in just a little bit of effort, 5 minutes here, 10 minutes there, the market will reward you with consistent opportunity. So if you want to see more consistent opportunity, you've got to make sure you're doing things like what I just described in order to get it. So check out the individual sectors of the S&P, right? Look at those ETFs, check out their charts, see if there's opportunity. If there is, you could play it, make plays on the ETF, or go in and check out individual names and see if there's opportunity there, both to the upside and to the downside. Let's see here. In terms of kind of where we're moving forward, let's dive into our Monday specific news so we can kind of stay on track here. All right, is this for today? Yes, it is. So we moved from the week ahead into, let me see. Actually, I think that might have been a wrap up of the past week. Regardless, all good information, but I'm pretty sure that was the week ahead there. Let me see. It was 11th. Yep. What move markets on the 12th? Yeah, so let me check out. Oh, no, so that was kind of summarizing last week, but I like that. I kind of want to add that into what we do every week, like going over the end of last week, the beginning of this week, and then also the Monday specific news. I like all of this together because a lot of people forget as we come into a new week what happened last week, and they kind of get caught on their heels, right? Heavy footed, I guess you would say. And then you're not ready to run when the market opens. So that kind of gives us a good exposition. In terms of this week, though, the retail sector is going to be in the spotlight, right? We've got Home Depot, Target, and Walmart all lined up to issue their Q2 earnings reports and updates on consumer trends. That'll be important this week. The U.S. Census Bureau will also issue the July retail sales report, which is forecast to show a slight acceleration from the pace seen in June. Traders will also be watching the release of FOMC minutes from the Fed's July meeting for more clues on the direction of interest rates after the July CPI print calmed some nerves. So we've got FOMC minutes this week. I don't believe Powell is speaking, but we do have FOMC minutes being released. Let's see here, and we'll go to Market Watch, check out our economic calendar on Market Watch, see what we got popping off this week. So Monday, nothing going on. Tuesday, Import price index. We have U.S. retail sales at 8:30 a.m. The biggest thing. Wednesday, FOMC meetings of July. So at 2 p.m. on Wednesday, we have the FOMC minutes from the July meeting. So that'll be important. No Powell speaking, but you do have FOMC minutes at 2 p.m. on Wednesday. Thursday at 8:30 a.m., we get initial jobless claims. And then Friday, we have nothing scheduled. So not too heavy of a week. Thursday and Wednesday, we have, important information, but really nothing pre-market that's too important until we get to Thursday. So that's good. We can just kind of let the technicals speak for themselves, in that kind of manifest and us not have to worry about all these events throwing things off. Now, quote, overall, the underlying details of the July CPI inflation data are consistent with ongoing progress on disinflation. We already kind of talked about that, so I won't go deeply into it. In terms of earnings, we already talked about Home Depot on Tuesday. It's a big one. You got Kava, the newly, public company Kava. Target, ticker TGT on Thursday. We've also got Cisco, CSCO, and TJ Maxx, ticker TJX, reporting on Wednesday. Thursday, Walmart, and then Applied Materials, which is AMAT, AMAT, and then Ross Stores, which is ROST. And then we've also got Tapestry, right, who just recently, purchased all those luxury brands. They're reporting on Thursday. Friday, we've got John Deere, ticker DE, and then Palo Alto Networks, ticker PANW, and Estee Lauder, ticker EL. And yeah, that's pretty much it in terms of the week ahead, which is nice. That was nice and short, so we can stay on time and go into today's news, starting off with AI generation. So with generative AI poised to reshape the publishing industry, companies are scrambling to take positions on the latest technology. What does it mean for their operations? How will it impact their workforce? And when can they begin to expect to benefit from or be harmed by the new developments? These questions have rattled publishers in nearly every sector of the media industry, from online content in the printed word to movies and even music. Snapshot, the knee-jerk reaction of many firms was to band together to stave off any threats to their bottom line. Hollywood actors and writers have gone on strike in part because they fear they might lose or share revenue with machines, with the walkout now going on for more than 100 days. Publishers like the New York Times, ticker NYT, Wall Street Journal's News Corp, ticker NWS, and Dotdash Meredith owner IAC, ticker IAC, also started talks to establish a united front against Google and Microsoft. The coalition explored suing big tech over content scraping and training their AI models on data produced by the organizations. But the New York Times has reportedly dropped out of the group, suggesting that they might reach separate deals with tech giants that wield tremendous power over distribution and visibility. So it's full on panic mode here for a lot of companies, a lot of workers, right? This is something that, again, will disrupt pretty much every sector. It's just the extent to which it will do that varies, right? But right now, there are a lot of people that are facing kind of imminent threats on their jobs, to what they do. It's so important to, again, make sure that you have different ways that you can make money, because you don't know how long you have before your job or your position is upended due to AI, right? Again, no one's trying to fear monger, but you can't be an ostrich. If you look at what you do and say, hey, I'm going to go on ChatGPT right now. Can ChatGPT do what I'm currently doing? Can, any of the new eyes, Bard from Google, right? All these, I forget what the other one is that we talked about last week, but all these different apps, can they do what I do right now for work? Could it do that rather easily? Could it do a certain component or a large component? If the answer is yes, number one, you need to be focused on two things: mastering AI to make you better than the AI for now, right? If you get into a high enough position using AI, AI can't replace you. That's the first thing. Learn as much as you can. The second thing is making sure that you can make money doing other things other than what you already do, right? So make sure that you work hard to learn AI in order to get yourself to a position where you can't be replaced by it. Number one. And then number two is also learn things that can put your money to work for you, the money that you have now, because you don't know what will happen tomorrow, right? Throw a 3 in the chat if you understand, you feel where I'm coming from. Because, we can't sit here and hope for the government to save us or regulation or any of this. All these people are going to do what's in their best interest. Every single one of them, right? These companies, these employers, they're all going to do what's in their best interest. You got to do what's in your best interest, and nobody's going to pat you on the back to do it, right? Nobody's going to say, hey, good job going to save your job, right? Making sure you provide value to the workplace. That's on us as adult human beings that were given the gift of life. Life is a gift, right? You were chosen out of tons of people that could have been born. That means there's something in you that was worth putting on this earth. Show them that you are worthy of that, right? Show everyone that you are worthy of this honor of being given life on this earth, and show out, right? That's what we got to do. And it takes only little acts, but doing those little acts with consistency that allow us to achieve what we're looking to achieve. So diving back in here, while corporations are debating their cash flow streams, the nonprofit sector is having an easier time making decisions. In July, the Associated Press reached a 2-year deal with OpenAI, the parent company of ChatGPT, by declaring the first official news sharing agreement with an artificial intelligence firm. That direction could benefit others as they scale their offerings and revenue, such as News Corp Australia, whose ticker is NWS, which is using a team of four staff to produce 3,000 articles per week using generative AI. News Corp Australia, crazy. The items cover daily topics like local weather, fuel prices, and traffic conditions, and have driven a surge in subscriptions and the subsidiary's best year in a decade, right? So the New York Times and all them are going to look at that and be like, wow, News Corp Australia is killing the game, and they have 4 employees, right? If I'm sitting here and I'm working at the New York Times and I see that, I am making sure that I am one of those 4 employees. How? I'm going to make sure I can crank out 500 articles a month using AI. That's going to be my focus, not striking in order to have them not hire artificial intelligence instead of me. That's not going to work because these companies got to survive too. I'm going to figure out how I become the best prompt writer in order to get the best articles out of AI so that I'm one of the 4 remaining. It doesn't matter what's right. It matters what's going to happen, right? Unfortunately. Is it right that all these people get displaced by AI? By AI, no, right? It's not right for us, but it's something that is going to happen. So I don't care if it's right because I don't get paid based off of whether I do something is correctly right or wrong, right? You get paid based off the value that you bring. So always look to bring value because this world is changing very, very quickly. Each and every day is changing fast. No reason to be scared, just a reason to give you energy, right? To give you energy to wake up in the morning. Nobody feels like waking up, but you got to pay them bills. Same thing. You might not feel like taking the time to watch a YouTube video about AI instead of watching your favorite show on Netflix. But if it comes down to you, keeping your job and getting moved up and getting paid a boatload versus getting laid off, it's an easy decision, at least for me, right? Let's see. Consumers are also debating what artificial intelligence means for their media consumption. Should they be informed whether a robot wrote an article, or is the creative press continuing to evolve in a similar fashion to what algo-generated tunes and CGI did to the music and movie industries? Things get even more complicated if generative AI is only used to conduct research or help write an article or prompt topics that enhance value and quality. Trust also plays a role here, but those lines might be lost or could one day be strengthened depending on the future of brands and their audiences. So, we're starting off hot here with our Monday topics. Industrial news, Steely rejection, Cleveland Cliffs, ticker CLF, and U.S. Steel, ticker X, wouldn't make a great alloy at current cast prices. Little metal jokes there. According to the latter company, it was just sent a $7 billion merger proposal to the furnace. U.S. Steel is still entertaining offers after rejecting the takeover, sending shares up 22% pre-market, and invited Cliffs, whose stock melted 6% in response, to participate in its review process. Developments come after U.S. Steel posted a 20% drop in Q2 sales, hurt by lower average realized prices. Though CEO David Burritt said he, quote, couldn't be more bullish on the sector thanks to the Inflation Reduction Act. In terms of stock news here, Maui devastation. The impact of the devastating wildfires in Maui is still being calculated, with the death toll reaching 96 as of Monday. The destruction of tourist and residential areas also hit certain stocks, with TD Cowen warning that Maui's recovery could take years and resort destinations are likely to disappear in the foreseeable future. Hawaiian Holdings, ticker HA, fell 8.5% over the past week, due in part to the airline having the highest exposure of flights to Maui. Host Hotels and Resorts, ticker HST, also closed at a 6-week low on Friday, while Hawaiian Electric Industries, ticker HE, shed 13.2% last week, and they've warned affected customers to plan for extended outages. So number one, first and foremost, prayers to everyone. I don't joke about prayer. I believe prayer is real. So pray for everyone in Mountain, those the families that lost people, that they experience that divine love to kind of help them get through that. Um, it's horrible when we have these natural disasters that occur all over the world. So it's terrible whenever you have loss of life. And in terms of kind of moving on to market related things, like from there, this hasn't been something that is directly affected like the S&P or anything like that. But it does affect companies that are local, right? Especially hyper local to Hawaii. So you've got Hawaiian Holdings. Which I believe is like Hawaiian Air, like pretty much like Hawaiian Airlines, and then host hotels and resorts, and then Hawaiian Electric. So all of those, have already had their move down. I wasn't actively looking to trade this. For the people that did, I don't think that there's any type of like moral discrepancy with it, right? People live, people die, good things happen, bad things happen. You got to put food on the table. So I don't think it's bad to make money shorting companies like this. I did not feel bad shorting the market when COVID happened. It is what I'm not actively. It would be different if I went out to Maui and I set this wildfire. I didn't, right? It's just something that is, and as a result, we have to adjust to that. So prayers up to everybody in Maui in terms of kind of like stocks and leveraging that. There could be something left. These tickers don't seem like big blue chips to me. And I really like to trade like well-known blue chip liquid stocks. So I kind of will rather focus on shorting, the larger market, which has done pretty good for us, I'd say, over the course of the past 2 weeks. In terms of tech news, tech outperformance, the tech rally has cooled with the NASDAQ 100 up 5% in the second half of the year. But BMO strategist Brian Belsky says Infotech, ticker XLK stocks, can still outperform the broader market over the rest of 2023. Investors will have to be more selective, though. Belsky screened for names with growth at a reasonable price, including Cisco, ticker CSCO, Intel, ticker INTC, and IBM. But the full list includes over 30 stocks. Quote, earnings growth improvement was the basis for our upgrade, and trends since then have only been better. So earnings growth improvement was the basis for our upgrade, and trends since then. And trends since then have only been better. He noted, quote, elevated valuation could be a sticking point for some investors, but we would point out that it has been a horrible predictor for future performance of technology. So, I don't really see the purpose of that little blip. It's kind of like, oh yeah, tech has been weaker, but it could still be strong by the end of this year. I feel like that's pretty well known, right? Pretty well broadcasted. In terms of today's markets, mixed bag. Japan and Asia down 1.2%, Hong Kong down 1.4%, China down 0.3%, India up 0.1%. I think that's very important, right? The Hong Kong and the Chinese sessions were very, very weak. So that has Chinese tickers on the docket for me at open, looking to short them, right? So, looking at Baba, Baidu, JD, Neo, however you say it, all of those are potential short targets at open in terms of going in, buying puts, and making money off of those stocks going down. So with China, selling off so much overnight and that bleeding into, that can bleed into our markets here today. So obviously all those Chinese tickers are on watch for puts. But that can also, kind of end up rolling into bearishness in our markets as well. In terms of Europe, the FTSE in London down 0.4, Paris up 0.2, Frankfurt up 0.4, the Dow up 0.2, S&P up 0.3, NASDAQ up 0.4, crude down 0.3%, gold flat, Bitcoin flat. And today's economic calendar, we've got nothing. So that's nice. What else is happening? Student loan repayments start up in October. Will it spark a recession? Will everything spark a recession? U.S. grid operators warn EPA proposal could cause power shortages. SoftBank in talks to buy 25% stake in ARM from Vision Fund. AI SoftBank, haven't heard about that in a while. AI beauty firm Oddity Tech, ticker ODD, shines with room for more growth. Pharma under threat from bill to expand drug price negotiations. Illumina, ticker ILMN, under SEC investigation over Grail acquisition. EV price war, Tesla trims some Model Y prices in China. U.S. judge revokes Sam Bankman-Fried's $250 million bail package. AMC slides, apes jump as new conversion plan cleared. Deep dive into COVID-19 vaccine makers, hope versus hype. So We're going to wrap it up, put a bow on it, and take it out there on August 14th, 2023. Freaking love August. It's my birth month, a beautiful month, amazing month. Sun is out. The birds are chirping. We're making money in markets. You can't ask for anything else. If you get any value from these sessions, just show love to the account, the YouTube shorts here on YouTube, the Instagram reels over on Instagram. Throw it a comment. It takes 2 seconds. It's a huge help for me to continue to keep bringing this value to you for the free ski, which is what I love to do. And other than that, if you know anybody who's not making money in markets and should be, make sure you send them over to adamhollandeducates.com. Tell them to use code MyTurn at checkout for our biggest sale yet, biggest discount yet to invest in yourself and get out here ripping and running in markets. Without further ado, I'll wrap it up there. Let's have a great day trading markets, and I'll see you back here tomorrow morning for our next Premarket Prep session. Have a good one, everybody.